let's get personal about personal finances. When it comes to your personal finances, don't just put all your eggs in one basket. Hello and welcome to the Durham Talents channel. My name is Jesse Durham. For today's episode, we're going to be addressing the idea of how to diversify your personal finances. Now, what I love that Nash brings up that I'd never considered before reading his book, Becoming Your Own Banker, is that the moment you begin this journey of becoming your own banker, the moment that you begin paying premiums into a properly structured whole life policy with a mutual company that pays dividends, and you start paying premiums into your policy, you've now bought this appreciating asset, this self-collateralizing, perfectly collateralizing, appreciating asset. Yes, you own it, you control it, you're compounding your money into the future over the course of your whole life, hence whole life insurance. And you can leverage capital via policy loans, sure. But the moment that you begin, and there are plenty of examples for that, right? Like plenty of examples of folks that have just used their cash value for things. The Disneys, the J.C. Penney's, the Miss Christophers with Pampered Chef, etc. But the moment that you begin implementing the infinite banking concept and you add scale to that concept, you're now in a brand new industry. So here's what I'm saying. Regardless of whether you, the prospect or the client that's listening and watching this information, regardless of whether you are an employee, you're self-employed, you're a specialist in your field, you have a small business, you have a big business, 500 plus employees, you're an investor, or any mixture of those things, because plenty of folks have side hustles and et cetera. The moment that you begin implementing the infinite banking concept, you're now in, think about this, banking right off the top. If you were doing conventional finance prior to implementing the infinite banking concept, which we all were, either we were, on somebody else's terms and conditions, borrowing their money, fronting collateral, paying them interest, etc., or we were setting aside capital somewhere, losing the opportunity to earn interest on that capital. We were doing either of those two things. But once we begin implementing the infinite banking concept, we pay premiums into policies that we own and control. We leverage those policies via policy loans to finance the things that we were going to finance anyway. Aren't we now in the banking industry? Yes, we are. See, that has nothing to do with whatever it is that you are already doing with your investments or how you are earning income or how you were experiencing cash flows prior. But now you're in the brand new industry, the brand new space of banking. And it's a privatized banking system that you've now implemented. So now those cash flows are going into and out of your own privatized banking system. You are banking for yourself. So whereas you were experiencing a 0%, goose egg, here's that camera, 0% in the banking space prior, now you're experiencing an exponentially higher number because you're actually in it. And really, if you want to break down that idea further, let's consider this. When you or I make a policy loan, and I've made policy loans now for going on 8 years. 8 years since my wife and I have implemented the infinite banking concept. We've bought multiple policies from multiple companies, paid significant premiums, done a lot of policy loans and repayments, and it said we've been on this journey of becoming our own banker. And we've made policy loans for lots of different things. Paid off student loan debt, financed family vacations, bought equipment, what have you. That's what I'm going to point out here is, yes, you're in the industry in the space of banking, but what are you making those policy loans for? Because wouldn't that now put you in a position of you deciding what to do with your capital for potential earning, which could be potential additional income above and beyond what you do regularly, normally, and other cash flows. And if you're making investments then into business or other assets, or even if you're simply financing your lifestyle, doesn't that put you in the e-commerce space? Online purchasing. Just, again, whatever it is that you're already doing for your lifestyle, even. Doesn't that put you in the automotive industry? If you privately finance your automobiles, or your automobile insurance, or your automobile taxes on a yearly basis, or anything else associated with your automobiles, doesn't that put you into the real estate space? If you are by chance in the position of using your policy cash values to make policy loans to pay your rent for the year, also perhaps negotiating a better price by paying a year up front. So doesn't that just put you, because of whatever our lifestyle is, doesn't that just put you in a better position of diversification in that way? Because now you're earning however you're earning. You're capitalizing for the rest of your life now by paying policy premiums, and you're growing and you're compounding forever into the future. Policy premiums that you are paying, so you're enjoying compound interest now. But not only that, you can leverage that capital for your lifestyle, for investments, for business. But again, I'm going to keep coming back to lifestyle, because we all have some level of lifestyle, whether or not we're in business, whether or not we're making investments. We have a lifestyle. And who do you want to be financing your lifestyle? Well, if you're on this journey of becoming your own banker, more and more you build and you grow and you scale this privatized banking system to where eventually you can account for 100% of your financial needs. You can account 100% for your need of finance, the banking function in your life. You can even get to where your income is equivalent to the policy premiums that you pay. Now, you don't start there. Nash would say it could take the average person 20 years to do that. Might take less, might take more. Again, that's an average. That's his number. But who do you want to be in control of the banking function in your life? And if having diversification is important to you, and I would point out here that the golden rule exists. He who has the gold makes the rules. If you're just living like the average American, but you're capitalizing into a privatized banking system, and that puts you in possession of the gold and making the rules. I mean, Nash said so many things following that point that opportunity will actually hunt you down. Wherever capital is amassed, opportunity is going to be attracted to that. But furthermore, yes, you become exponentially more profitable by being in the banking space. Does that tie into lots of other different spaces where now you can begin recapturing interest that otherwise had been going to the automotive industry or the real estate industry or the e-commerce industry or any other industry? Okay. Yes, it does. Yes, it does. That has you in a position to be able to recapture interest that otherwise would be going to someone else. And you're growing and scaling and compounding your cash flows into the future, or at least the portion that's going into policy premiums. I mean, it's just the ultimate in simplicity, just to finance whatever it is that you're already doing. So it's so straightforward. You could become your own banker. It's so simple. You could capture interest that otherwise was going to somebody else. And consider this. How much additional risk did you assume by becoming your own banker? None. In fact, you gain control by becoming your own banker. So some common questions or points I like to bring up about becoming your own banker is that to implement the infinite banking concept, you don't have to work any harder, change your cash flows, assume any additional risk, or lose control. So you don't have to do any of that to become your own banker. But the moment that you do begin this journey of becoming your own banker, owning policies, paying premiums, accessing capital to finance your lifestyle, be an honest banker, pay that back plus interest. You didn't have to work any harder. You didn't have to lose control. You didn't have to take any additional risk. Didn't have to change your cash flows. And now that just because of whatever your lifestyle happens to be, that just immediately began to diversify what things look like for you in the future. So consider these aspects. When you begin this journey of becoming your own banker, what happens immediately the moment you own a new policy? The moment you own a new policy, does your net worth go down or up? Massively up, right? Because right away you have a cash value. Right away you have a guaranteed death benefit to your beneficiaries. I mean, for those really that thinking long range and doing better for the next generations, for those of us that want to leave that kind of a legacy and that kind of an intergenerational impact. I mean, what happens immediately every time that we get a brand new policy? Setting that future generation up, not to have to start from scratch like many of us did. Setting that generation up so much better. So your net worth right away goes up. What about the level of control that you had of your personal finance? Did that go up or go down with the ownership and the guarantees of a properly structured policy from a mutual company that pays dividends? It went up. If you're interested in compound interest, what does that mean now for those premiums that you pay forever into the future and they just keep compounding without interruption now? What does it mean for you if you have an interest in multiple streams of income? Can you use the capital that you amass for business opportunities, for investing opportunities? Right. So, I mean, even just above and beyond recapturing interest, which is, I mean, again, compared to the average American, you're just going to be blowing by the average American. Remember the concept of headwind versus tailwind. You're going to have a tailwind like no other. Everybody else, the average American is fighting a headwind just by recapturing interest dollars that otherwise would have forever left your hands. But knowing that you can, if you so choose, to leverage your capital for, I mean, fill in the blank, whatever it is that you want to do. I'm not making any advice on investments or business or anything else. But could you finance your own business? Could you finance a side hustle? Could you finance other assets? Absolutely. Absolutely. And who controls the banking function in that? So how about passive income later in life? Because I don't personally use the term retirement for myself. I have adopted Natchez mentality on retirement, but passive income, sure. For those that are interested in passive income, what does it mean for you now to know that you could take depreciating dollars and fund an appreciating asset that's going to grow and compound forever into the future, your whole lifetime, and that you're going to maintain a guaranteed access to that appreciating, compounding pool of capital into the future? Now, what might that mean? Will that impact, good or bad, your options of having passive income into the future? I mean, if you could take $1 today and procure more than $1 into the future, perhaps even multiples of that same dollar. Did that help you? Are you with me here? I mean, if you can pay, and I've shared some numbers before here, and I don't want to get bogged down in numbers, but again, that's why I just simply say that if you could pay a depreciating dollar today and have access to appreciating dollars, that's dollars, into the future, is that better or not for you? Absolutely. So just by adding that one step, for those they're vetting the infinite banking concept, becoming your own banker, just by adding one step, again, not assuming any additional risks, not losing control, not changing your cash flows, not working any harder, but by considering adding this one step to what it is that you're already doing, by becoming your own banker, you get to procure for yourself that greater net worth, that guaranteed access to appreciating, compounding capital. And there's just so much here. So on that point of diversifying your personal finances, I don't care if we're talking about somebody that just does a 9 to 5. You've been in that career. You plan to stay in that career. Just plain Jane, 9 to 5. You're going along in your career. The moment you begin the journey of becoming your own banker and you're compounding your money into the future, that immediately puts you into that banking space. And we've already talked here, and Nash does in his book, of course, about how well the banks are doing by financing our lifestyles. So what if we simply do that for ourselves? That is the simplest way, the most practical way, and the most profitable way that I know of to diversify your personal finances, just by financing what it is that you're already doing. You're already doing it. Become your own banker in that, and it's the most profitable thing that you could choose to do over your lifetime. Remember, banking just is. It exists. It is a function. We think of it as a place. We think of it as that beautiful building in the pretty part of town with the best kept grounds, right? And all the beautiful people on the inside. Beautiful people on the inside. But it's a function. Who controls the banking function in your life? It exists. Banking just is. And you can become your own banker. And when you do become your own banker, remember this point. There are actually 2 ways to earn money. One way is people at work. Right? Again, I've already mentioned the 9 to 5. So somebody shows up 9 to 5. It's an exchange of time and skill, what have you, for a certain amount of dollars, a salary, a commission, an income, whatever. And another way to earn is to have money at work. So either people are at work or money at work. And again, if I reference Robert Kiyosaki's cash flow quadrants, E, S, B, and I, the E and S side, the employee and the self-employed side or specialists, that's people at work. You got to show up to mow the grass to get paid. You got to show up as a dental hygienist or a doctor or a specialist in your field or a small business owner, or whatever the case is. You have to show up, and there's that exchange of time for money. Okay? It's just that way. I'm just describing it. That's not a judgment of any sort. So that's people at work. Again, there's people at work in investments on the opposite side of the cash flow quadrant, big businesses, 500 plus employees. But consider the position of the owner. See, the owner of the business of 500 people, they're creating a whole lot of leverage for themselves to where now money is at work for them. They don't necessarily have to put their hands to the task. Okay? And investing as well. Again, money at work instead of just people. So the moment that you are becoming your own banker, you're putting your money to work. Those dollars now that we pay as premiums into these policies, they grow and they compound forever into the future. So that's our money at work for us. See, otherwise, again, we've talked here about deposits to a bank. Banks lend out multiples even of that, let alone the money itself that we deposit there. And it's because they actually look at deposits as a liability. And we need to adopt that thinking. We need to put our deposits to work for ourselves, but then adopt that thinking of, okay, well, that's a liability now. Let's put that to work, financing whatever it is that we're already doing. So what I'm saying is it's ultimately a great way to consider how you're diversifying your personal finances by becoming your own banker. Not just because you're putting the money to work, which you are, growing and compounding into the future, but also when you are financing something in your lifestyle, it's putting you in that particular space as the banker. In the auto industry, in the real estate industry, in all these different industries. So I hope that this has been helpful for those that are vetting the idea of becoming your own banker, and also for current clients, because I know that we have clients that they love what we're doing. They're paying their policy premiums, and maybe they're not doing anything with their policy. Now, if that's you, awesome. Remember this, the golden rule. He who has the gold makes the rules. There's nothing wrong with being well capitalized. He who has the gold makes the rules. But again, the infinite banking concept is not just owning great policies with great companies and having it as more or less a glorified savings account. Again, this is becoming your own banker. If that's what you want to do, you can do that. And again, it behooves us all to be well capitalized. But consider how you can implement financing something for yourself that you're already doing or that you want to do. Because the infinite banking concept is about paying yourself first, paying yourself with interest and recapturing the money. So what is it that you're already doing that you can begin financing for yourself, and you can now recapture that principal, that interest, and any profit back into your own privatized banking system. So for those that are interested in diversification, I hope that this has been helpful and insightful using this infinite banking lens. Please let me know what your takeaway was down in the comment section. And if you'd like to have a conversation about how to implement the infinite banking concept in your household or your business or your investing so that you can be better diversified, then don't hesitate to reach out. This has been a great pleasure for me. I look forward to our next conversation. Have a great day. Take care. Let's get a microphone over here before we start talking to the people. When it comes to personal no, let's not say just that.
I've got to have some more coffee. I'm sounding a little croaky. What you've got to do is diversify. Wazbowski. That's about right, isn't it? Wazbowski.
Is that the name? Did I get the name right? I don't know. I got to double check.
What we're talking about is becoming your own banker. How to diversify.